Welcome to September and Game On. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market report for Tuesday, the 4th of September. This week should be a very important week. We have Merkle and Monti and the ECB stepping up and coming into focus this week. ECB Bank President Mario Draghi is quoted as saying yesterday that he is comfortable helping to buy 3-year government bonds to help struggling nations help fund themselves. But guess what? It all gets down to market perception. This is not something that politicians have quite mastered. And that is what traders' perception and what traders expect will happen in the future. The perception in the precious metals market is indicating that inflation is on the way, and both the price of silver and gold should climb substantially in the weeks and months ahead. Technically, that is also what the markets are telling us. As we mentioned earlier, it all gets down to perception. Perception is a powerful market force that is one that's difficult to measure and track on a chart. However, it is a force that must be reckoned with by traders and politicians everywhere. If you have any specific questions for Market Club TV, just post them at support@ino.com. Now let's go to the charts and our trade triangles and see what's happening. So here we are. We're going to go right to the portfolio. And we do have some things that did change today. And that is, we did have a signal in the S&P 500. This is a weekly chart. And you can see we had a weekly trade triangle kick in just today, September 4th, at 13.97. Currently the market's around 13.99. So right around these levels, that was a kick in for this particular program. And that's significant because you've got the weekly and the monthly. Weekly down, monthly up, and the daily down. So it's a mixed bag, trading range type scenario. But let's go to our daily charts. And you can see this is looking like it's getting set to test the 50% Fibonacci retracement around the 1390 level. So I think this market could be on the defensive for the day and certainly for maybe the remainder of this week. So let's see what happens. Lots coming out this week, so we want to be careful. But going to our next market, this is something else that you want to look at too. And I want to go to this is the Dow chart, and I want to go to a weekly chart. And what I want to share with you here is the fact that for the first time in 13 weeks, this is the little line up here. We see this line right here. This is the PSAR. Okay, for the first time in 13 weeks, this market hit through there today. Very important. And I think it's also saying the market's on the defense. If you've gone, this is the Dow, and you've gone to a minus 100% on the downside. So I think it's definitely worth watching this market. We've been very skeptical on the Dow, as you know, and this signal just confirms that everything's red and on the defensive. So I don't think this market's going to climb out of this anytime soon. So let's just clear the screen, go to our next market. And the next market we're looking at is going to be the NASDAQ, and that market is kind of like just hanging in there. It's obviously a lot better than the Dow because it's only 55, indicating a trading range, as opposed to a downward trend that we're seeing. This is a weekly chart. Again, the key level there is going to be watching, I think, somewhere around the 3,000 level. If we go below that level, it's going to be a little bit negative in my opinion. So let's go back to a daily and go back to our next market. That's the crude oil. Crude oil is putting in a little bit of a defensive day today. What's interesting on this chart to me is the fact that let me just move this over here so you get a better idea of what was going on. So what's interesting to me on this chart is the fact that we have a monthly right here, which is negative, and a weekly and a daily that's positive. So these are both positive. This is a negative, indicating longer term lower prices. But look at how the market came up, went over and out of the Donchian trade channel, came back to the midpoint and has a little bit of rally and sort of stops. Now I would not be surprised to see this market test the lower level 92 of the Donchian trade channel and possibly even go lower. The other key area, and I'll clear the screen right here, is the trend line that you can draw from the lows, recent lows, right back here. Now let's just put that in, draw that in as we see it right now. That's going to be incredibly important. If we go below that line, it's definitely going to put this market on the defensive. This has been in place since July, actually since late June If it breaks through there, then I think we can see possibly even further weakness coming into this market. So we may have a big risk-off approach with all of the markets, but we'll see how that plays out. Looking at the euro dollar traded over the 126 level again earlier, but now it's on the defensive, 125.61. Again, a mixed bag here. Longer term, monthly is negative, and the weekly and daily are positive. Now, I think this could change. I think we can see this market. You can see one thing that stands out to me on this market is the fact that you've got this divergence. Notice how the Williams %R is going this way, and the prices were actually going this way. That's a divergence in prices indicating potential weakness. Now, the 125 level, which is right here, where the parabolic is, if we go below that level this week, then I think we'll see a test of the recent lows, which is the 123 or 122.50 level. So still, we are negative longer term based on our monthly trade triangle, and we're going to stick with that long-term trend for now. But for the moment, let's see some momentum, maybe in the next couple of days. But certainly this week with all the ECB announcements, perception is going to be the key and how the market perceives that. So let's clear the screen and go to our next market. And the next market we're going to be looking at is gold. Now, as you know, we're very, very positive on gold. And here's the reason why. We have a plus 100 score, meaning all of our trends, all of our trade triangles are positive. Plus, if we take this, scope this out to its logical conclusion, and we put in a long-term trend line, which I'm going to do right now. This is the trend line we mentioned in our report today. And you go from the highs here. Make sure you have the little yellow box there from the highs here. And you go all the way down to the lows. You have the 3 points that touch. 1, 2, 3. You're through there. We can see this market going substantially higher and possibly breaking over the $2,000 level, which would be a new all-time high. The previous all-time high was 1,920. But this looks like inflation in Europe, inflation in the States, and all kinds of upside. And I don't think that's going to be necessarily good for stocks, but it's certainly going to be very, very positive for the gold market. So moving right along to copper. Copper is in this sort of twilight zone. It's you're in a plus 60 trading range. Really not much going on there. So we'll look at that when it gets more interesting. On silver, same pattern in silver that we have in gold. And that is the market is definitely in a long-term bullish trend based on breaking this long-term trend line. You can see it right very clearly that right there. So I think that's one of the keys that we're looking at. And the fact that it's broken above this line indicates that we're going to at least go up and test the 36 to 37 level and possibly go up to test the 48 to $50 level, which is the previous highs we saw back here almost 2 years ago, over 2 years ago as a matter of fact, in April of 2011. So actually 1 year ago, I should say. Let's go back to our next market. And this is the Reuters Jeffrey Index. Well, let's get a little more data on here, of course, but let's just go to a, there we go. And so you can see all of our trade triangles are very, very, very positive on this market, and it looks like it wants to go higher. We've got the 320 level as major resistance and the 305 level as major support. So I think those levels are going to probably continue. And we've seen this sort of little energy based enough to push it up to test the 320 level. I think that's where the first target will be, and that's where the market should subside. But two things to remember today, in my opinion. One is let's just go back here for a second. One is the Dow. This is not a good signal at all, minus 100. As you can see, we had the negative weekly a couple of days ago, I should say. That occurred on, let me just make sure I got this, just 1 second. That occurred on the 30th of August, just before Labor Day. And you can see the action is not good today. So I think, generally speaking, even though we're at the lower end of this particular channel, the Donchian trade channel, I still think this market can be on the defensive. I just think there's just too many negatives out there, and some of the news is not coming in that's good. Now, the other market to look at, in my opinion, and really pay close attention to, is the gold spot. Now we may see a little pullback from here, but generally speaking, this market's going to be in a bull market. We want to look for places to buy and go long. Much the same way in the silver market. Same pattern there. We've had the breakout, monthlies, everything's green, everything's a go. So any kind of pullback in these markets and consolidation, I'd want to be a buyer in these markets. So here it is. We're back. It's September. There's a lot going on in the marketplace. It's going to be a very, very busy week and lots of news coming out. We'll do our very, very best to keep you up with that and tell you what the markets are doing based on our trade triangle technology. Hey, this is Adam Hewison. Good to be back. Hope it is for you too. And let's have a great trading week. And I'll see you tomorrow, same time, same place. Have a great trading day.